The Charles Schwab U.S. Divided Equity ETF, SCHD, is a popular ETF for investors seeking dividend growth. Below are the main advantages and disadvantages of SCHD. Advantages: a high dividend yield. SCHD aims for stable dividend growth and offers competitive dividend yield in the 3 to 4% range. Dividend growth stock-focused composition. The portfolio is made up of companies with a strong dividend history, and stable dividend growth is expected. Low operating remuneration, 0.06%. The operating fee is very low compared to other dividend ETFs, so there is less cost burden for long-term investments. Good long-term performance. It has recorded competitive performance not only in dividends but also in rising stock prices. It also shows a good gross return compared to the S&P 500. Quality management of portfolio. The criteria for selecting stocks considering financial soundness and dividend growth are applied. Investments centered on companies with low debt ratios and sustainable dividend growth. Disadvantages: lack of sector distribution. It is concentrated in some sectors such as finance, industry, and consumer goods, and growth potential may be limited due to the low proportion of technology stocks. Dividend cut, reduced dividend risk. If the companies included reduced dividends, the ETF's dividend yield may also be lowered. Sensitive to the interest rate environment. Higher interest rates may reduce the appeal of dividend stocks, and ETF prices are likely to fall. Lack of growth stocks centered on high dividend stocks. Due to the low proportion of high-growth stocks such as technology stocks, the return may be low compared to ETFs, SPY, VOO, etc., which are mainly growth stocks. Quarterly dividend payment. Since dividends are paid quarterly rather than monthly, it can be a disadvantage for investors who want monthly dividends. General review. SCHD is an ETF suitable for investors who want steady returns over the long term with stable dividends. However, it should be taken into account that the proportion of growth stocks is low and may be affected by the interest rate environment. If you want a portfolio with a strong dividend payout, SCHD is a good option. But if you want a wider variance, you might want to consider investing in parallel with other ETFs, SPY, VTI, etc. If you are an investor considering SCHD, it is important to weigh your interest rate outlook and your investment goals, dividend versus growth.